G'day, Internet. Max right here. And once again, we have our very good friend Juan here. Juan, thanks so much for joining us.
Max, thanks for having me. I apologize for the audio. It's a new setup. I'll promise I'll do better next time.
Okay, I can hear you, so that's all good. We want this vast knowledge inside your noggin here. We're going to be able to get it, so life is good. We got a lot to talk about today. Since we've last spoke, we've had the FTX fallout, we've had the crypto market crash related to that. We've got that whole SBF stuff we got to talk about. But also, it's December. I thought it was really relevant to talk about what's going to happen here in 2023, and I want to come back and revisit your timing model. So all of those things we're going to chat here today. So guys, if you're at home, hit that like button. Let's get into it. Juan, where should we start off? Let's talk about SBF a little bit and FTX, because you actually did have some funds in SBF, and it looks like you've lost it. Why don't you go ahead and tell that story?
Don't tell me I lost it, Max. I think it's stuck, all right? For now, I think it's stuck. I mean, maybe it only gets 20 cents on the dollar, and that's better than nothing. So no, it's not a lot of money, but yes, I do have some funds stuck in there. So I have some like firsthand experience. If you want, I can recount the story. There was, and this I learned through my contacts, that there was a significant amount of shorting going on FTX prior to the collapse, because a lot of crypto hedge funds didn't trust anybody else other than FTX. So basically, if you want to go short crypto right now, there's basically, there's three options mainly. You can go on DYDX, in my view, which is pretty good. They have a good selection of assets to short, perpetuals and futures, actually only perpetuals. Pretty good selection there. The issue is there's not a lot of liquidity. So it's good for retail folks like myself. I have most of my funds in there because they're non-custodial. I don't like custody in crypto. I like to have custody of my own funds. So I trade mostly in there, and that's never changed. The other two options were Binance and FTX. Now, Binance is not even a company, right? Binance is a shady, and I think CZ is a good guy. I think he's the best, smartest guy in crypto, just to be clear. But as a company, okay, they've cut some corners, and apparently what I've heard is that institutions don't trust Binance. They don't want to trade there. So most hedge funds were on FTX. And I can relate to, I think this is the case because I do a lot of arbitrage in futures markets. And there was a lot of shorts in FTX, a lot of shorts. And since the collapse, these people have moved on to other exchanges. I've seen that. You can see it in the data. I can share some links with you if you want, but I can show you that, yes, there's a before and after FTX, where some exchanges didn't have a lot of short interest, short positions built on them, and then post FTX, you can see the significant increase in short interest. So especially in DYDX, where I trade the most. So you can see that people who cannot do what they were doing in FTX have moved on to other places. So anyways, so I noticed that a lot of people were shorting on FTX, and there was this, you could make significant money if you could take the other side of those trades, of those shorts. If you remember what crypto was doing prior to FTX, it was mostly going sideways. So there was nothing going on. Mm-hmm. And yet there were a lot of bears. These bears wanted to express their bearishness by shorting perpetual swaps. Their main avenue to do so, like I said, was FTX. This led to very high negative funding rates. Negative funding rates means that if you buy the future, the perpetual swap, you get paid high interest. It was pretty high, actually. It was between 30 and 50% annualized. Pretty high. I mean, these are like bull market level of funding. So, wow. So you had to be there. If you do this type of trade, you had to be there, at least with some money. And so I had some money in there. When I heard that people were taking their funds out because of this thing going on with CZ and the FTT token, we could get into what I think happened, because I think there's a lot of noise. And I think what happened is pretty simple, but we can get to that. So when I saw these tweets and the fact that FTT was collapsing, a friend of mine pointed out that, hey, listen, there's a lot of people taking their money out of FTX. So I went in. I was at a conference at the time, so I didn't have a lot of free time. That played into what it played a role into why I have some money still stuck in there. I didn't have a lot of that. I had like 30 minutes break. So I went in, I closed my positions. I took most of my money out. I left a small amount. I said, I'll get to this tomorrow. I didn't think it would collapse as quickly as it did. I did think they had the assets one-to-one, because pretty basic. I mean, if you read the history of finance, banking. I mean, why do people complain about fractional reserve banking? Well, because they lend their money out and there's no money when you want to get it out. That's the issue. And crypto companies, for the most part, in the aftermath of Mt. Gox, they learned this lesson to have one-to-one assets, right?
I mean,
Assets should be backed one-to-one.
It's the world's most volatile market. How, like, you're taking a risk on hundreds of the world's most volatile assets in the world.
Incredible.
How can you do anything other than be one-to-one? It's insane.
It's insane. It's insane. So I didn't think Sam would be this stupid. To be honest, I didn't think he would be this stupid, but he was. So Tuesday morning, this happened on Monday. The bank run started Monday. Tuesday morning, when I wake up, I was in the States at the time in Florida. I went to take my money out. Whatever was left, because like I said, I took most of the money out, like 80%, I think, the day before. The 20% that was left, I woke up. First thing I did, I logged into FTX, just did my withdrawal as usual. Within 15 minutes, the withdrawals wouldn't process. So I thought, okay, maybe they ran out of money on their hot wallets. So when in on chain, I went to the block explorers to see whether or not there was any money in there. And I noticed that no withdrawals have been processed since for the last 2 or 3 hours. There was only money coming in, but there was no money coming out. Side note, by the way, they still allowed people to deposit for the next 3 or 4 days. You could still deposit to FTX. You could still open a new account. This is insane. I mean, the level of that's got to be a crime. You pause withdrawals, but you still allow deposits and you still allow new accounts. I mean, come on, how can that be? Yeah. It was very confusing. But when I saw people tweeting, I think it was the block that broke the story, saying there's rumors that FTX has paused all withdrawals. And I remember seeing a screenshot where they were keeping track of all withdrawals. And from, I don't remember what the time was. I think it was like 7 a.m. Eastern time in the US. Mm-hmm. No money was going out of the exchange. And I thought, okay, I've never seen that happen. Like, I've seen exchanges pause withdrawals for certain assets because their hot wallets have been drained. Everybody took their money out. So it takes 2 or 3 hours for exchanges to move from cold storage to hot wallet and then to process withdrawals. I've seen that happen. But you can usually get around that by just buying another, like, say you want to withdraw USDT, you can't. Okay, I'm going to withdraw USDC. If you want to withdraw Ether, maybe you can't do that, but you can withdraw Bitcoin. I've seen that plenty of times. I've never seen a complete pause in all withdrawals. And it hit me immediately. I was like, okay, there's something going on here. And there's only one explanation. They don't have the money. And the only explanation for why they don't have the money is, well, they didn't have assets one-to-one. There's no backing. There's no one-to-one backing. This is Luna all over again. Yep. They have 20 cents for every dollar of deposits, and that 20 cents is gone. So now they don't have anything left. Pretty sad story. It's a pretty sad story, and it is pathetic when you look into it.
It is like it's just beyond comprehension that this person could be so. I can't believe there's this level of naivety for a person who has achieved what he had achieved. You run an exchange, you're at that level, like just being in the crypto world. Like if you're in the crypto world and you buy a quarter of a Bitcoin and you hang out here for 6 months, you know fractional reserve banking, you understand it all. That's the reason you buy crypto. There's no way this guy's been in crypto for years and years and years and doesn't know this shit. So it's just willful fraud by my understanding. He knew exactly what he was doing. Doing all these interviews and pretending to be all like a clueless, hapless goat is absolute bullshit. I have zero time for it. He's trying to get away with this innocent bullshit. I'm not falling for it at all.
I don't understand why he's doing it. Clearly, he's not listening to his lawyers because he's been caught, making some pretty incriminating statements on some Twitter spaces, because obviously people are going to ask tough questions. They know he's full of shit. Like we all know you're full of shit, Sam, if you're listening to this. So you're going to have some tough questions coming at you and you're not going to be able to deflect all of them. There was a recent interview by CoffeeZilla. It's on his YouTube channel. Recommend people check it out. If you listen to it, I do think he admitted to fraud. He admitted to commingling funds. So on the terms of terms of service, it says, no, your assets are held one-to-one in segregated accounts. We never lend them out. And then he said on this Twitter Spaces, he's basically admitting that when users went to get their money out, there was no segregation whatsoever. It's just one big pool of assets, and people who were lending and people who had just Bitcoin in there, they were withdrawing from the same pool. So you're commingling funds. So then that's a violation. So that's not what you said. You said they're segregated. He basically said, no, they're not segregated. So that you're admitting to fraud. The other thing is, I'm glad you brought that up. Anybody who's been involved in this industry knows that crypto, even the best, like the blue chips, even the Bitcoins, the Ethereums, they go down 80 to 90% in a bear market. This guy is, what he did, and this is very interesting because it could be just mismanagement. I will say that. It could be just he's stupid. He doesn't understand what he's doing. I don't think that's what it was. I think he needed money and he justified it by saying, hey, listen, here's what he did. He raided customer accounts and he left an IOU in there. The IOU was Serum tokens and FTT, mostly FTT, a shitcoin. So basically he's like, I'm going to take, just to simplify, I'm going to take $5 billion worth of Bitcoin out of this account, and then I'm going to replace that with $7 billion worth of FTT. It's over collateralized. Problem is that 7 billion of FTT is not really worth 7 billion. It's probably worth nothing. Maybe it's worth that 100 million because there's no liquidity in that market. You could never sell this amount of money of tokens at that price. So it's bullshit mark to market. It's mark to fantasy. That's what he did. He took money out of customer accounts and he replaced whatever was there with an IOU, namely his own shitcoin. His own shitcoin went to zero in the aftermath of this CoinDesk report. So now there's no money left, obviously. Now he continues to believe, and he tweeted this repeatedly, oh, but I had 6 billion worth of assets. Here's the thing though, if you have, 60 billion worth of assets. If you have 60 billion worth of shitcoins at the peak of a bull market, you should mark that down 99%, right? So your 60 billion probably worth around 600 billion at best if you wanted to get out. I guess he didn't realize this. And I actually do think he didn't quite realize this because he said, oh, I had 8 billion in debt and 60 billion in assets. And then that suddenly became 15 billion in assets and 8 billion in debt. And suddenly I have 6 billion in assets and 8 billion in liabilities. It's like, yeah, dude, because your assets are shitcoins.
No, I think you're a lot more generous than me. I think you're being very, very kind there. I think so. George Gammon did a really fun kind of deep dive into some of his history and some of his quotes and stuff like that. And he basically years ago talking about the concept. It's like well, listen, capitalists are evil. You know, they all make money. They donate it to terrible causes. They're greedy. They don't help humanity. I'm basically justified in stealing money faster than they can steal money because I use it for benevolent purposes. I donate to this, I donate to that. And he basically justified the fact that he was going to try and steal as much as he could, as fast as he could, because he was stealing it ahead of bad people. This is the kind of warped mentality that these people have. You know what I did find very, very interesting? We've all heard about him donating big to the Democrat Party. Turns out he was a really big donator to the Republican Party as well. That only came out just a couple of days ago. So that was very, very interesting, which I didn't know about. So he was just, he was just, it's just typical, it's just everything. It's everything that's wrong with the world is this right here. It's summed up in a human being. It's like, I'm going to justify the most disgusting, terrible, evil behavior because I believe I'm so wonderful and so righteous. I have to do it and do it quickly and do it ahead of all the bad people. And then I can make the world a better place. This is the same mentality that every tyrant in history has ever used, every thief in history has ever used. It's just your standard, just double standard, no standard human being justifying their behavior. And it's a fascinating window into psychology. I'm fascinated by psychology. I'm fascinated by that. But this is just pure evil. It's just an evil person justifying their shit, as far as I'm concerned.
No, I don't disagree. I want to make clear that what I think happened is Alameda went bust in the aftermath of the Luna collapse, and then he had a decision to make. He could let his hedge fund, quote unquote, because he wasn't that good a trader to begin with. So he could have let his hedge fund collapse, or he could just take money from customer accounts, send it to Alameda so that it could pay off whatever debts they had and keep it solvent. And then in order to make FTX users whole, without telling anybody, okay, you don't have your Bitcoin anymore or your dollars or your Ether, but here's some FTT tokens. And he just kind of said, you could kind of see how he fell into this, where he makes the wrong call. He doesn't want his hedge fund to fail because he sees the honeypot of billions of dollars in customer funds. And he's like, no one's gonna know it is. So I'm just going to do a little swap here. He knew when he made that decision, he knew that was wrong. Absolutely. He knew he was stealing money from customers. I think he just tried to make it better by not just raiding the accounts. No. I'm just going to leave my IOU. I'm going to swap your Bitcoin for FTT. Don't worry about it. You're an FTT holder now. FTT is pretty good. And it's like, no, it's not. You know it's not. But whatever, because you want to rescue your stupid hedge fund. So I'm not saying he's innocent and he didn't know what he was doing is wrong or he didn't steal money. He stole money. He stole money though, but he wanted to make it right, which makes the whole story even more pathetic.
Yeah.
That's what I think.
Do we have confirmation on the timing of that? Do we have data that says there was no commingling of funds until after Alameda's collapse? Because I suspect this was going on from the very, very beginning, but I don't have any proof of that.
I agree. I think it was going on from the very beginning, but only on a very small scale. So if you go through his tweets, it's just the details just kind of like the stuff he doesn't want you to know just kind of reveals itself. If you read everything he's saying, and I was obsessed with the story for weeks. And at one point he says that I think Alameda had about $2 billion of customer funds. At one point that became 8 billion, and this is in the aftermath of the Luna collapse. So at one point they were using customer deposits to some extent, but it wasn't huge. So unless it was unless everybody wanted their money out, they probably would have been able to make everybody whole. But at one point they raid the accounts. They really take a lot of money out of accounts. He doesn't give a specific date for when this happened. It's very clear, however, that this happened during the Luna collapse, because when Luna went down, crypto credit markets froze up, and he did admit to seeking funds. So what he did first is he tried to borrow money from other sources. Mm-hmm. They were denied, so they were faced with a choice. The hedge fund that's Alameda collapses, or we borrow money from FTX. They went with, let's borrow money from FTX. And that's when it all went to crap. When they made that stupid decision of, instead of letting the hedge fund fail, I'm going to bail it out with customer funds without them knowing. And I'm going to make my customers whole by replacing them with more money than I'm taking out, only it's denominated in FTT, which is, these people will never be able to get their money out. I know from firsthand sources as well that when CC tweeted out that he was going to sell, he never did, by the way. He tweeted it out and he never did. He had no idea what the issue, how big the problem was. He just thought it was a red flag. Listen, he looked at the balance sheet and went, but most of your assets are just your own shitcoin. I mean, I don't want to be part of this. So he tweeted out to make it right. He tweets out that he's going to sell these tokens. The thing crashes. It turns out that most of these tokens were secretly actually being held by, in the end, FTX customers were holding these FTT tokens because their assets were sent to Alameda, presumably to pay off debts. Nobody knows where that money went. I think we're going to find out at some point. It's a fascinating story. There's so many sides to it. I mean, this guy just blunder after blunder. I don't believe he was such that good a trader, because if you listen to him talk, I trade too. I recently listened to an interview with Kyle Davis from 3 Arrows Capital. Oh, he's a trader, definitely. He made some bad bets. But you can clearly see he's a trader. He's trading. He tells you about his trades, what his base trade was, what his worst trade was, what his mistakes were. I trade too, and this is how we think. Oh, I just fucked up with that one. Sam, I don't know. Some people say that he set up the exchange, FTX, because he was not doing well with his own trade. So he thought, okay, I'm just going to charge, commissions. I'm going to trade against my customers. And that's why he set up the exchange. Now, I will say, however, the exchange was pretty good. Like the user experience, the contracts, the markets, It was pretty good. That's what people were using. I think that's getting lost in their narrative. And like everyone's like, oh, this is a giant Ponzi scheme, blah, blah, blah. How do you explain that they were able to gather all these assets? It wasn't the ads. It was just that it was a pretty good exchange. It really was. Yeah. They did build something of value. It's just that everything else about it sucked.
Gotcha. I never used it actually, so I don't know what the experience of the exchange was. Now, your point there about Luna being a thing and an integral part of this, I think builds to the most important question that we all need to ask is, and I said this several times here on YouTube, that the Luna collapse, the fallout, we saw relatively recently, relatively quickly, we saw BlockFi, we saw, who else did we see? Three Arrows Capital. We saw a fallout from Luna with a couple of big names quickly. And then we had a quiet period. But I said at the time, this is not the end of the Luna collapse. There is more fallout to come. And here we are. We went through a quiet patch. No newer companies announced anything. And then here we are several months later, and now FTX goes down. And it absolutely was related. And so now you have one of the biggest exchanges in the world. You have Luna, a monster stable coin. And here I am saying again, the fallout is not complete. Who knows how many people are upside down, illiquid, and just don't have the balls to come out and say it yet, and are trying to do some magic trick bullshit like SBF tried to pull a rabbit out of the hat and become solvent. And it's not going to happen, and we're going to find out more. And I just think there's a lot more carnage to be seen from this. What say you?
I don't disagree in terms of companies failing. I think there's some, I mean, I think there's been a few, but the market shrugs it off, right? BlockFi, completely irrelevant. What BlockFi, I think the market was aware that they were likely going to fail. Because what happened with BlockFi is they failed after the Luna collapse. Alameda bailed them out. When FTX falls, obviously people said, okay, that means BlockFi is bust too, because this company that was going to bail it out, it was a line of credit, I think. Don't quote me on that. I'm not sure what the arrangement was. But the point is, when FTX falls and Alameda falls, everybody assumes, yep, BlockFi is bust. And they filed for bankruptcy. I think it was last week or the week before. Market just yawned. Doesn't matter. Completely priced in.
We knew that. Mm-hmm.
We knew that. So the one I'm worried about is Genesis. That is the only one I'm worried about. I am worried about Genesis. Genesis is big. And they're kind of like a Wall Street firm.
What is Genesis?
So you know about DCG, right? I mean, Digital Currency Group. They were the only institution, big Wall Street institution involved in crypto when I got involved in crypto. So when I got involved in crypto, 2016, DCG, they own CoinDesk, they own Grayscale, GBTC, and I think the other one is ETH, I think. These two closed-end funds that are trading at like 50% discounts. They own both of them. Cash counts with company. They own a bunch of companies. They own a lending company. There's a crypto credit company called Genesis. It is part of that group. So they own CoinDesk. They own other companies, but the bigger ones are Grayscale, CoinDesk, and Genesis. Genesis Lending, I think. I don't know what the name is. It's called Genesis. Genesis is a big crypto lender. Three Arrows Capital, for example, made a lot of money from Genesis. Just doing arbitrage with GBTC, their Ether fund, and just borrowing Bitcoin dollars from Genesis. Genesis is very well connected, big company. If they were to fail, I fear what the repercussions would be. In fact, on my own service, I've looked, and we can get into price action. Recently, I said, listen, I think the low is in, but I will say there is headline risk here. I don't know. I think that if smaller lenders fall, the BlockFis of the world, I don't know. I honestly don't know. I know there's Nexo as well. They recently pulled out of the US. I thought that was fishy. Why now? What issues are there? I don't think the market cares. However, if Genesis falls, I think the market cares. I think the market reacts to that. However, I also think they're probably going to get bailed out because I hear the hold is about $1 billion. They need $1 billion. And DCG, unlike all of these guys, is a Wall Street firm. The owner, Barry Silbert, is a Wall Street man. They can probably get $1 billion. They probably can. I saw some headlines the other day that Goldman Sachs is getting into the space, buying distressed assets. Listen, I didn't call this out publicly, but I thought, listen, if I was BlackRock, Goldman Sachs, JP Morgan, and I wanted to get involved in crypto, there's no better time than now. There's blood on the streets. You can buy these companies for pennies on the dollar. Genesis being one of those companies. I also heard that they were being offered DCG, Digital Currency Group. They were offered, I think, $300 million for CoinDesk. This is the biggest crypto media company, I think. They rejected the offer. What that shows you, however, is Digital Currency Group has a lot of assets. I think even in this bear market, GBTC makes about $100 million for the company a year. They have plenty of assets. They can probably make Genesis whole. Now, they have a big hole from the Luna collapse. They were lending to 3 Arrows Capital. I think they lost $2 billion there. And DCG, the parent company, bailed them out. So this is yet another hole in Genesis. The question is there willingness from the part of the parent company, Digital Currency Group, to bail out Genesis again? I think so, because I think that if I can see that this could probably affect the crypto market in a very bad way, they can probably see that too. And listen, I may be completely off here, but I think Genesis is going to be fine. However, if they're not, I think they're big enough to create another sell-off, another leg down in this bear market. However, if smaller companies fail, I don't think it matters. I just don't think it matters. Listen, there's a distinction between Bitcoin is not the crypto industry, right? This whole crypto credit market that developed in the last bull market, it started in 2020 or 2019. Crypto doesn't need this shit. We don't need this. We don't need this for the next bull market. We don't need this for the next leg up. We don't need any of this. We don't need any of these lenders. BlockFi, Celsius. I mean, what are these things? They're banks, unregistered banks. They have nothing to do with crypto. So crypto can survive their collapse. I think that the longer we go on without any of these negative headlines hitting, our consciousness, the more we are able to the more we're able to see this with a cool head and realize it doesn't matter. It doesn't matter. Are you really going to sell your crypto because Genesis is unable to lend? These things are not one and the same. And I will say, DeFi never failed. Continue to work because it's non-custodial. And so we know when I started trading in crypto, I didn't trust any custodians. Eventually I did because you could make more money if you just deposit your money with an exchange, but these are unregulated, shady companies that have nothing to do with the core of what this industry is all about. They have nothing to do with crypto. And I hope they go away. I'm glad FTX is gone. I'm glad Sam is gone. I didn't like that dude.
Yeah.
I'm glad they're gone.
Yeah, the cleansing out of all this nonsense is for a better, stronger, healthier crypto market in the future. People always be like, oh, but what happens if, but 12 months ago, the big fear was that what happens if Tether goes down? What happens if USDT goes down? And I was like, it wouldn't affect, like I'm a Bitcoin holder. It wouldn't affect me at all. Is there still 21 million coins? There's only ever going to be. I still own a certain percentage of that. And in the long term, it matters zero. But there'd be some tarnish from it, and it'd be great buying opportunity. I get that, but for the core principles of crypto, for the core principles of Bitcoin, none of this shit matters in any way, shape, or form. It doesn't matter in the long term. It's just this regular cleaning out of bad actors, be it them incompetent or criminal and evil in the case of SBF. That's just the way it is. So but now back to your point about future fallout. I agree. A bunch of little ones or whatever doesn't really matter. Are there any more big whales to fall? I don't know. What about, so you touched on this, but the Grayscale Bitcoin Trust, and I haven't been watching this too closely, but these things are trading at a 47% discount. And last I heard, but I'm going back a couple of weeks, they were asked to show proof of reserves, and they came out and said, we're not going to do that because we see the risk associated with that, which is absolute bullshit. I saw that and I was like, this is fishy as fuck. But then I saw Cathie Wood come in and buy a whole bunch of GBTC. Now, the reverse is, if you can do the due diligence and satisfy yourself that the company is whole, then buying Bitcoin at a 47% discount now when the market's already down, like, it's as bad a good a deal as you're ever going to get in your life. Like, I want to do it. I don't have the means or whatever to be able to go in and audit them. I would love to chat to Cathie Wood. It's like, what gave you the confidence to come in here and buy this? I understand the strategy, buying Bitcoin at 47% discount, hell yeah. But what gives you the confidence that it's all there, given all the things that are going on in the crypto market right now? Do you have any idea what's going on in her mind, or what due diligence she has access to?
I do. Now,
Please,
she probably
share.
has access to more information than I do. The custodian is Coinbase. So GBTC doesn't custody their Bitcoin. Coinbase is the custodian. Mm-hmm. Coinbase has an arm. One of the companies is they offer custody services for big firms, GBTC being one of them. I think it's called literally Coinbase Custody. Mm-hmm. Coinbase is a publicly traded company. They have regular audits for the quarterly reports. So as of their last report, they have all the money they say they have, audited by one of the big 4 accounting firms. I don't know which one. I think it's Deloitte. Mm-hmm. That's what gives Cathie confidence. Now, she probably knows somebody at Coinbase and at Grayscale, and she probably talks to them, and they told her, yeah, we have the Bitcoin. Now, this is what I heard. I heard this from people who would know. Coinbase has never revealed their wallets for security reasons. Now, you can argue whether or not that makes sense or not, but this does not start with GBTC. Now, here's the thing. GBTC doesn't have custody of their Bitcoin. Coinbase does. Coinbase does not publish their public addresses for privacy reasons. I don't know what those reasons are.
How can we not know that, though? Surely the sleuths out there would figure this out really quickly.
There's probably speculation out there.
It's such a monster wallet. How could you not know?
I think if you go on Twitter, you can find people who have a pretty good guess, and they're probably right of what their wallet addresses are. I think that information is probably out there, but you're not going to get this from Coinbase. And what I hear from people I trust is this is the way to do things. This has nothing to do with the recent FTX proof of reserves fallout. It's nothing to do with that. This is the way Coinbase has always done things. They do not share their public addresses for privacy reasons. Again, I don't know what those reasons are, but I know that we shouldn't trust and verify. And I agree 100%. Like, listen, big lesson for me, take custody. This industry was created to remove financial intermediaries from ourselves and our assets. This technology allows you to have direct ownership with no counterparty risk, with no intermediaries of your wealth, of your assets. So take custody. That being said, if I was going to trust any company in this industry, it would be Coinbase. And I hate Coinbase. I don't use Coinbase. I absolutely hate that exchange. But I do think they hold assets one-to-one because they're super highly regulated. I think they're the most regulated company in this space. That's always been their bet.
That's true. Yeah.
So that's always been their angle. Their angle is we're going to be the most compliant, the most regulated. And they literally have one of their subsidiaries is a custody company. All they do is their business is to hold assets one-to-one and prove that they own those assets. This is how things should be set up in this industry. If you are going to take custody of somebody else's crypto as a company, you're an exchange, for example, you shouldn't have custody. You should use third-party custodians. This is how Wall Street is set up, and it's for a reason. It's because it's very tempting if you have a hedge fund to tap into your customer deposits and use them for gambling. This is what happened in 2008. Big banks this is Glass-Steagall, right? In the aftermath of 1929, there was something created in the United States called Glass-Steagall. This was the separation between commercial and investment banking. Why? Why did they do this? Because banks would routinely place crazy bets with people's money. So they would bet on, they would just trade with people's money.
Yeah.
Right. And so that was one of the things that led to the 1929 collapse. So in the aftermath of that, they created new regulations to say, no, if you're taking customer deposits, you cannot just gamble those away in whatever crazy bet you think is gonna work out, because you're literally trading with other people's money. You should not do this. Clinton era, I think it was in the 1990s, they repealed Glass-Steagall. They once again allow banks to bet with other people's money, which creates systemic risks. And that led to 2008. Banks were using their customers' deposits to place crazy bets on mortgage-backed securities and CDOs. So then we learned our lesson again. We cannot do this. So now we create the separation again. This doesn't exist in crypto. So FTX is a hedge fund, market maker, exchange. And all exchanges, including Binance and Coinbase, they're prime brokers, custodians, hedge funds, and it's all commingled. And so it's too easy for them. And I'm not accusing anybody else. I think FTX is alone in this. I think they're the exception, they're not the rule. But the possibility is there. Binance could, if they wanted to, use all of their customer money to do VC deals, which are the worst in my opinion. I mean, these things mostly go to zero, especially in a bear market. So Alameda was borrowing money to do a lot of VC deals, and these things are marked, they're down 99%, they're totally liquid. And so we should have some separation. If you're an exchange, you probably shouldn't have custody. If you're a hedge fund, you shouldn't have custody. We should create some separation in the industry, clean it up, because these centralized players are not going to go away. They're going to stick around. For the next, I think for the foreseeable future, we will still use the likes of Coinbase or Binance in this industry. We're still going to use them. So we might as well regulate them, clean them up. I'm all for regulating these companies. I've always had the view that the likes of BlockFi or Nexo or Celsius, they're banks. I mean, look at their business. What is their business? Their business is taking in customer deposits, lending those out, and earning the spread. That's their business. Okay, that's a bank. That is a bank. That is not like Aave. Aave is not a bank. Smart contracts. There are no owners. It's just a decentralized application. There's no custody, right? Nobody has custody of those assets. Decentralized finance, DeFi, very different. But if it's a company, that's a bank. That's all it is. It's a bank. They're taking in deposits and lending them out. Banks. Banks where these crypto banks, let's call them what they are. These crypto banks were far too common in 2020, 21, 22, far too common. I never used a single one of them. I did get caught in FTX because you could trade there, liquidity, you can you could do a lot of arbitrage. So I use most exchanges. I never once even thought of using the likes of BlockFi. That made no sense to me. I'm like, but these are banks and they're not even regulated. Like, why would I, this is everything that's wrong with fractional reserve, right? When I lend money through BlockFi, you have to know your assets are not there anymore. They have been lent out. But what is the difference between BlockFi and JP Morgan Chase? The difference is they don't have access to the Fed, right? If JP Morgan Chase is under threat, they get a bailout. The Fed prints money and bails them out. If BlockFi fails, you're done. You've just lost your money. So that's why I didn't trust them. It was like, well, these are banks, only they're not regulated as such, and there's no insurance. So why would I? It's crazy to me. I understand that it's easier to use than DeFi, because I had some conversations with people who lost money on Celsius and BlockFi, and I always say to them, listen, you can make a lot more money on DeFi. And they're like, I don't know how to use DeFi. It's too complicated. I get it. But there's a big difference. If you use DeFi, you have custody of your own assets. If you don't use DeFi, you do not have custody of your own assets. And so your assets are at risk, significant risk, as we learned in 2022, significant risk. Honestly, I hope these companies never come back. I never liked them. I don't understand why we needed them, because they have nothing to do with crypto. And I'm glad they're gone. I'm not glad. I think it's a fucking tragedy that people lost all this money. I hate that. I absolutely hate that. It pisses me off because it's a stain, it's a black eye on the entire industry that has nothing to do with this. So now people don't trust crypto because BlockFi is bust. BlockFi is not crypto. They never were. So I hope people can make the distinction. I'm pretty confident they can in due time. I think the message will get out there and people will understand that DeFi is not CeFi that these are just banks that, and even there, I hope people can distinguish between decentralized applications and smart contracts and things like Bitcoin, which are super simple. It's just money backed by energy. That's all it is. If you have custody, that's it. That's all you have to worry about is don't lose your keys. So I hope people can understand that there's layers and layers of risk you can take in this industry, and that the most basic layer, which is Bitcoin, pretty safe from all of this, has not been affected by any of this. I hope people can understand this.
Yeah. Let's go to your timing model.
Okay.
So let's just give us a catch up. It fired. It called for a bottom in a certain period, but then you mentioned earlier in this conversation, you mentioned something called headline risk. Tell me what all these things mean. Tell me what it means to if how can things play out from here?
All right. So I don't know if you remember this. I think I may have mentioned this off air. I hope I didn't, but I did mention in the last conversation there's going to be a retest of the lows in November.
That was on air.
That was on air. Okay.
Yes.
That was what you saw was a retest so far. Now let me explain something because it can get nuanced. If you look at the price action, if you pull up a chart of Bitcoin, you will see that there is a crash between in November 8th and November 9th. And it breaks the June low, the June 18 low specifically. It breaks that low. The low was 17,000. It broke 17,000, but only for one day. The very next day, November 10th, Bitcoin rallies back and it closes at around 17,000. This may seem like a cop-out, but it's not. I swear it's not. To my timing model, that means support held. Okay, so even though we made a lower low at about 15,000, we made a lower low. The fact that we broke that level on daily closing basis for only one day, and then on the next day, we rally back above support again. We rally back to support, 17,000. We rally back to that level. To the timing model, that means, yes, we have a new bear market low on November 9th, but the trend is still neutral. We have not switched to bearish. So typically for the model, if we broke that June 18 low and we kept heading lower, in other words, if we broke, let's say we break on November 10, Bitcoin closes at 15,000, the next day it closes at 15,000, to the timing model, that means new bear market, we don't know where the low is. The way it worked is, this is the test. This is exactly the test that I was looking for. It breaks, but only for one day. And the price action that follows that test is sideways. So if you look at the price action now in Bitcoin, I think right now we're at 17,000 again. So since that FTX collapse, we broke 17,000, we closed at 15,000. The very next day we closed at 17,000. Literally all the price action that came after that, it's been almost a month, has been between 15,000 and 17,000. To the timing model, that means there's a very high likelihood that that was a retest we were looking for, and that's the bear market low. The reason so I'm going to say that again. So far, look, we have our test. It's almost exactly the way I thought it would be, and we have not made new lows. So we have not closed below 15,000. We're trading between 15,000 and 17,000. As long as that's the case, that's a retest. The low was November 9, and the price action that follows should be higher. Headline risk to me remains high. So how do we know that I'm wrong? If Bitcoin closes below 15,000, I'm wrong. The bear market continues. I don't know where the low is. Probably in January, probably. And I'm only saying that because if you look at every single bear market bottom in crypto, in Bitcoin, it was either November, December, or January. I'm a cycles guy. I pay attention to this stuff. To me, that is a signal. That's not noise. Some people might say, well, that's random. I don't think it is. I think the fact that you always make bottoms in November, December, or January is meaningful. So if we break 15,000 and we keep heading lower, maybe we go to 10. I don't know where the low is. But from a timing perspective, I would look for a low in January. However, so far, all I've seen is that, yeah, this is the retest. The retest can be like this in crypto. Again, I'm not making this up. I mean, we can do an entire discussion on this. I can show you there's plenty of bottoms where you have a support level, it breaks that support level, but only for one day, and then it rallies back above, and it trades sideways for a couple months, and then it goes back up. There's plenty of lows in Bitcoin that there's plenty of bear markets that ended this way. So when I saw the pattern play out almost exactly as I imagined, I was like, this is too good to be true. You gotta be kidding me. So on that strong rally on November 10th, that's meaningful. If you look at Ethereum, which Ethereum has become the other benchmark in this industry, Ethereum looks even better. I mean, Ethereum is trading well above the June low, and it's the same pattern as Bitcoin. It really didn't break the low. The low in Ethereum, I think, is September 21. It didn't really break that. It broke for one day, then it rallied back above, and the price action, it's the same as Bitcoin, has been inside that range. As long as that's the case, this is the low. Now, again, I don't know what happens if Genesis falls. I can't sit here and say, well, that doesn't matter. I think it does. The one thing I learned, so this timing model that I use works very well, with one exception. There's one time when you can't trust it, and that's when there's what I call headline risk. COVID was headline risk. There's a bunch more. Before the COVID crash, there was another significant low that was made in 2019. It was I called it the China low. It was some news about China doing this or that, banning this or that, and there was a crash. There was in 2018, there was the whole hash wars, Craig Wright fighting with Roger Ver, that led to another crash. I made the same call. I said, I think this is a low for the same reasons. It's just headline risk. Once that's passed, you're clear. I called for the low in December 2018 because it was obvious that there is no more headline risk. We're done. This hash wars, Bitcoin is V versus B cash, that's all done. We didn't have this credit market, crypto credit market that was nearing collapse. It's a little different now. I'm not so confident this time around. I'm not so confident that Genesis won't drag the market down again. I'm not so confident. I'm 60-40. I'm 60% sure it won't happen. 40%, yeah. Some headline hits the market between now and the end of the year. Genesis is bust, and Bitcoin goes to 10,000. We'll see. We'll see. But for now, all we've seen is what I predicted. Retest in November. If you want to know why November, because it's a year from the last stop, right? There was one reason I didn't like June as the low, and that is because that's only 7 months from the top, and crypto bear markets always last a year. So November, that's why I said, okay, the way this is probably going to work is we have the low in June. That's a very important low. That one gets retested in November to give us the whole year, and then we can rally from there. The forecast from now, assuming there's no more headline risk, is that we go nowhere until February. And after February, we start heading higher again. That's the forecast. But again, I want to be very clear. If you see headlines about digital currency group winding down and selling, GBTC being wound down and selling all their Bitcoin, yeah, I mean, that can probably bring the market down. However, we have about a month for that to matter. If this doesn't happen within a month, Bitcoin probably rallies between now and the new year, and then let's say DGC goes bust, it retests that 15,000 low, and that would absolutely confirm that 15,000 is the bottom. I also think that we didn't get a chance to talk about the macro now, but it's pretty clear that if you look at other assets like gold, bonds, China's printing money again, the liquidity cycle is shifting. Like we're starting to leave the hard money, tight money period. We're going back to easy money pretty soon. Just like you would predict. These things go on for a year, then the system begins to break down, and then Bitcoin can smell this from a mile away and starts to make a bottom. So the macro looks pretty good. The macro looks good. The chart looks good.
Even though there's been no my shirt just went away. Even though there's been no loss or no meaningful dent on inflation.
oh, I think inflation has peaked. And I think it's going to be obvious by March that inflation is going to go way down. Yeah.
Okay.
No, I think it's just markets front run this. So you should not wait for inflation to go down 3% for Bitcoin to rally. They're gonna smell this. They're gonna see this coming before it actually happens. This is what happened last time, by the way. I'm not making this up. Just look at the last time the Fed hiked rates. Bonds and gold started smelling the pivot a year before it happened. So gold and bonds made a bottom in between August and October 2018. The pivot was September 2019. So it was a year before all these assets were starting to reverse. And by the way, before the Fed raised rates, the Fed started raising rates in March, I think, March 2022. Bonds made a top in 2020. I don't remember what the month was, but the bond market started raising rates in 2020. The Fed started raising rates in 2022. Same thing happens in reverse. Bonds will smell the change in the liquidity cycle in 2022, late 2022, early 2023. The actual shift may happen January 24. It doesn't matter. You have to look at the price action. And traders, markets usually see this coming and they react accordingly ahead of time. Again, I mean, there's plenty of things you can point to. I think my favorite is the inversion in the yield curve. Euro-dollar yield curve, the bond curve, yield curve, everything is inverted. And for those who don't know, that basically means the market is saying the pivot is coming. And as the inversion gets worse, that's the market saying, oh, it's coming very soon. It's around the corner. And the inversion is brutal right now. It's extreme. In some cases, unprecedented. German yield curve, unprecedented inversion. Never happened. So the markets are saying, and I'm listening, markets are saying there's a shift coming in the liquidity cycle. This is the thing that makes Bitcoin go up. It's the liquidity cycle. It's not the halving. It's not any of these things. It's the money printing. And it's coming. It's coming in 23. I'm pretty confident right now because we're seeing the signs. Like I said, the only issue I have, the only reservation I have, the reason I'm a bit more gun shy this time is because, well, there's this headline risk. There's this DGC, Genesis, credit, companies. Crypto didn't have this before. Now we do. So that gives me pause. I'm going to be a bit more confident in January if we still haven't seen anything. So the summary for me would be this market is ready to bottom. The only thing that could drag it down once again, but it would be short-lived. I mean, just look at the FTX collapse. This to me was the worst collapse this year. We went down for 2 days. Luna was a month, and it wasn't as big a deal. Come on, it wasn't. FTX was way worse. The damage that was done to the industry, like 1 million people lost their money, crazy. How many people were in Luna? You have 3 Arrows Capital and a bunch of companies. Yes, it was bad. FTX is just worse. So you can see that the market is ready to bottom just by comparing the two sell-offs. One of them goes on for 30 days, the other one goes on for 2 days. If Genesis goes down, which, I mean, if pre-revealing that you yourself didn't know who they were, maybe it goes to 10, 12 for a day or two. And then but the thing is, then the same process starts again, right? Sideways trading for a couple months. You have to break some critical levels. We haven't reached any of that. I can share some levels with you right now. There's two possibilities. Bitcoin can go up and cross what I call bullish reversals on the model. That will be 19,000. So if Bitcoin closes above 19,000, that confirms the bottom on November 10.
That confirms the bottom happened already?
Yes, 19,000. Okay. The other possibility, and I think this is far more likely, Bitcoin goes sideways so it doesn't break the low. It holds the November 10 low until February 15. So if Bitcoin continues to trade between 15 and 17,000 by February 15th, 2023, you can also confirm the low. You can also say, okay, the low is in, just based on timing. So this is the thing I like about my model. I look at time and price. So and there can be a combination between the two, right? If Bitcoin crosses 18,000 by January 15th, I think that's actually the actual number. Yes, you can also confirm the low. But the two extreme scenarios is between now and the end of the year, it goes above 19,000. That confirms the bottom. If it continues to go sideways into February 15th, that confirms the bottom. So there's these two possibilities. And there's a headline risk, which is just, I mean, all bets are off. It's hard to know. I think that without FTX, you probably would have retested the November low, but it wouldn't have been as dramatic. It probably would have held 17,000. It would have been a couple of days down, and it would have held that low more clearly in the charts. If you look at a chart now, you can see that it broke. It's just this thing where, okay, if it breaks for one day and then it rallies back to that support level, doesn't count as the model calls it a change in trend. So the trend it switched to neutral last time we spoke. What I said was, hey, big deal, the trend is neutral. The only thing that would have made it bearish again was breaking the June 18 low and continuing down. That would have made it bearish again. Obviously, you're making new lows. That didn't really happen. So it did break the low, but it kind of held. Let's put it that way.
Yeah.
So that's it. So far.
What about give me some low side targets? If let's say we get some headline risk and it goes down, where is it going to go down to? What are the levels you're looking at?
I'm looking at 10,000 and that's only based on option activity. Just that's where most people have their puts. They're betting on 10,000. So that's what I think it would go. Below that, it would be unlikely. The thing is, if you look at if you look at historical parallels, the low should be November at 15,000. Why 15,000? That's 80% down. Why November? That's a year from the top. This is the best call that I can make based on historical patterns. November at 15,000. That's what we got. We got November at 15,000. So if it goes below that, I mean, where's the low going to be? 90% down? That's 7,000 on Bitcoin. That's 90% down. We have not seen a 90% down since like the very early days.
All right, let's talk about. You've spoken about headline risk within the Bitcoin community, like a Genesis.
Mm-hmm.
There's so much though. We like these interest rate hikes, absolutely unprecedented. We know that real estate collapses, like real estate crises from this is not going to happen the month after interest rates go up. It's not going to. These things take years to wash through the economy. So we have, I think everybody is expecting, significant downside in real estate here as a result. All the other macro issues. There's headline risk outside of crypto as well. I think it's important to acknowledge. You could see supply chain issues. You could see China issues. You could see more wars break out. You could see more pandemics. There's an endless amount of some more likely, some less likely scenarios in the black swan world. So, given all of that stuff, where do you put? Can you go ahead and put like percentages on it? Like, what percentage do you think it's like our lowest seen?
Like I said before, I think that I call it the liquidity cycle. I may have borrowed that from Raoul Pal, so credit what credit's due. Maybe that comes from Raoul Pal. I think the liquidity cycle has turned or is about to turn. The reason I'm saying that is because I'm going to default again. I think Raoul Pal does amazing work on this. He tracks the liquidity cycle. He tracks it very well. I think that's one of his strongest points. He pointed out recently that China has begun to ease. So China's printing money again. They're back to expanding credit. Now, based on what I know from my own research, a lot of people don't know this, but China is actually one of the biggest contributors to global M2. Global M2 is the amount of money that's in the world. China has become one of the biggest players, the second largest. And China leads the rest. So to me, the fact that China is back on easing mode again, and they lead the rest, and they are by themselves very important. So it's not like China is a small thing that's a leading indicator. No, China is very important. It's the second most important central bank in the world. If they're easing, that typically means the rest of the world is going to ease soon. So to me, that means the liquidity cycle is about to turn. I don't have anything to point to specifically except interest rates are going down and gold is going up. The last time the liquidity cycle turned, we saw the same thing. China started to ease, gold started to go up. Maybe for that reason, maybe it's because gold traders have, look, China's printing again. Let's buy gold. I don't know. Could be. And then there's interest rates. So interest rates also making a low. That I think is going to be a very important low. So even though there's a lot of headline risk, for Bitcoin specifically, I'm not talking about stocks, I'm not talking about housing. I think for crypto specifically, if we go from tight money to easy money again, crypto makes a bottom, it rallies. I don't think it's going to be a bull market in 23. I'm not saying that. I'm saying the liquidity cycle has turned. In other words, yes, the Fed may continue to tighten a couple more times. I think they're going to tighten in December, most likely. I think they're going to go for 50 now. Next meeting, I don't even know where that is. It's going to be 25. And then I think they're done after that. So they're going to just pause. The Fed on pause is a turn in the liquidity cycle. Because after they pause, they probably raised enough already that something breaks in 2023. And by then, they go back to printing money. What am I basing that on? I'm basing that on the yield curve. The fact that traders are betting that interest rates, they don't pause, they go down in 23 at some point. I believe it's probably going to be in late 23. Remember, these markets react ahead of that. So if it is true that we're going to see the Fed pivot in late 2023, you're going to see crypto markets make low now. Not when they do it. You're going to see it now. People react in anticipation of this. We need some confirmation of this. To me, it would be inflation continues to show that it peaked whenever it did. I think it peaked at 9 in the States. If it continues to go down, I think that's going to build more confidence in people that, yeah, the liquidity cycle has turned. But to me, it's China, it's the timing, and it's the fact that gold and bonds, these are the two markets that I follow the most to see when that cycle has turned. And they're both saying right now, yeah, it probably has turned. I don't think the Fed is going to pivot just yet. I don't think they will. I don't think it matters. I think the markets will react in anticipation of the actual pivot. And I think crypto is one of those markets. Crypto's late, actually, in reacting to these turns, into these shifts in liquidity. But it follows gold and bonds pretty closely. So, yeah, I mean, I think if the liquidity cycle has turned, the world doesn't matter. None of these things matter because they're printing money again. Now, it matters for stocks, it matters for housing, but specifically for crypto, which is the market we care about the most, none of these things matter. The only thing that matters is liquidity. Are they printing? Are they easing? Are they tightening? But right now, you can clearly see that we're shifting from tightening to easing. You can see it in the language coming out of the Fed. You can see it if you look at leading indicators like China. And you can see it, I think other central banks are also starting to pause or maybe pause. All we've seen for now is a pause. Good enough for markets. So I think the macro looks good, actually. It's constructive. It's the internal dynamics of crypto I'm worried about more than the macro. I think the macro we discussed before, by late 2022, we're there now, you're going to see that they're just going to stop.
Can they start printing again without an excuse?
No.
So there has to be some fire they've got to put out.
Oh yeah, they need to put out some fires, but I don't know if you look. So
the question is, does that fire cause a blip in the Bitcoin market?
No, I don't think so. Personally, I don't think so. The reason is this market is just completely washed out.
There's some wisdom to that. See, I think we only disagree by a little bit. See, I think Q1 will be the low. I'm really confident that the low is in 2023, or it's definitely not 2024 is what I'm saying. Could be now, could be 2023, but I think most likely early 2023 is and it could be there. And if that played out, we basically, it's because that's consistent with your model as well. You've said that because there is that headline risk. But I just think in order for the Fed to pivot, they need an excuse. It's like, okay, we're going to stop selling. And remember, interest rates and money printing are two different things. Mm-hmm. Like interest rates up and down or whatever else doesn't change the money supply. It's the printing that does. Now, the only thing with the changing of the interest rates, what that does is perhaps possibly bring defaults. And in defaults, that's money vanishing. That is a shrinking of the supply when the defaults happen. But otherwise, and I think there's plenty of defaults in our future. So I see money supply shrinking still. They will need an event in that world. Money will vanish. It evaporates during those defaults. And on those defaults, that they'll go, okay, we've got to rescue this market, that market, whatever market. And then the money printing starts again. And although the whole crypto world knows that's the only catch, right? Every single person on the planet knows that by now. Hopefully that's all everyone's been talking about for months. Everyone knows that. I don't understand. It's just never been in my DNA to be like, I've got to front run this thing, because they have to wait for the building to be on fire before they pivot. So to me, there has to be some negative event there, and some. Now, the only thing that one of my biggest arguments to fight against this instinct that I have, I don't know why, but I've just seen it over and over and over again. It's just a gut feeling that I have, is that Bitcoin especially loves to repeat its habits, let's say. And I'll explain what I mean here. We saw big, giant, usually it's a blow off top, right? And in this cycle, the $69,000 high, it wasn't a blow off top. It was this rounded top. And my only thing is, I'm like, that irritates me now, because now it's changed. And so if it did a rounded top, I wonder if it does a rounded bottom. And it just makes me think, well, okay, and if it's a rounded bottom, that's what this would look like. We're in the middle of it, right? And that's what that would look like. So it's like, okay, we normally get a blow off top. Often there's some capitulation thing at the bottom, and there's some nasty thing at the bottom. And I'm like, well, we didn't get a blow off top, so maybe we don't get this capitulation at the bottom, and we get a nice rounded bottom, and then here we are. And that's the biggest one for me, fighting against that. Not particularly scientific, but hey, that's what I do, right? I'm not as numbers driven as you guys and things like that. So that's that. Hey, listen, let's wind it up there. Guys at home, Juan mentioned something earlier here. He talked about, he says he hopes all these exchanges disappear, and all these companies like the BlockFis of the world, the lending, it all disappears for the sake of DeFi. Now, I've just recorded, I haven't aired it at this moment, but by the time you watch this video, I will have aired it. I've just had an unbelievable conversation with a gentleman named Chad, who is, integral to the world of Thorchain. For those of you who know, I don't talk about altcoins. I don't even talk about Ethereum on this channel. I'm like a Bitcoin guy. There is one altcoin project which I have followed for years. I've interviewed Eric Voorhees on it. I've got a whole playlist on this topic, and I haven't touched the topic for well over a year. I just recorded a video with Chad giving you the update on Thorchain, which is the only other project in the entire crypto space that I really, really care about. I think it's an essential thing that something like this happens in the very near future. And I've just recorded that, and I highly recommend you check it out. So go ahead. That video will be showing up on your screen right now, and check that out. Juan, thank you so much for joining us. Look forward to seeing you again soon. Can we chat to you again in January?
Absolutely. Look forward to it.
Cool, buddy.
We can compare notes.
Speak to you soon, buddy. Bye-bye.
Yeah, bye-bye.